Good morning, class. I hope in the last class you were clear about the concepts of interest on loans and interest on capital. So today we will start with the new topic and we would be discussing the basic questions but at an advanced level. So in the last class, I just want to give you a brief about it. That in the last class we discussed that in the absence of partnership deed, the interest on loan is charged at 6%. And same is the case with the interest on capital. However, interest on capital is only applied when you know that the partner is entitled to get the interest on their capital. Moving on to the new question. The question reads, A, B and C are in partnership and during the year ended 31st March 2019, they earned a profit of rupees 83,000. So this is the profit that they earned. A and B are entitled to 5% per annum interest on their capital. So the interest rate is mentioned and their capital is also mentioned, which is 60,000 and rupees 1 lakh respectively, while C has no capital in the firm. And C is also entitled to get 12,000 per annum as a salary. Now, the commission which C would be getting is 5% on the balance profits. So, profits, whatever the amount you are giving on as the interest, the salary. So, after charging the interest, the salary and the commission. So, whatever amount will be remained, then C would be getting 5% on it. The remaining profit, 20% shall be denoted to Prime Minister's Natural Relief Fund. So whatever profit will be remained, then out of that 20% will be transferred to as donation. And they are sharing the profit in equal profit sharing ratio. You are required to prepare the profit and loss appropriation account for the year ended 31st March 2017. So there are few things that you have to keep in mind. So what are those things? First, you have to take that interest on capital needs to be given. And what is the rate? That is 5%. Second thing is the salary to C, which is 12,000 per annum. Third is the commission to C, which is what it is given. Commission to C is 5% on the balance profit. So 5% on the balance profit. And now when we talk about the balance profit, what are they saying? After deducting. So what they are saying that after deducting your interest, salary and commission. Right? And the next point that is being given is after deduction of all the expenses, 20% we have to give into the as the donation. Clear? So moving on to the solution. Let's move to the solution. So the solution is to C salary account. It is already given in the question that the C would be getting how much? 12,000. So this is direct thing. Now next is to interest on capital account, which is 3,000 and 5,000. Now how do they have calculated this amount? So if we see the question, what it is saying, so I'll minimize the screen for you. So now you can see in the question it is clearly mentioned that what is the A's capital? A's capital is, what is the amount? 60,000. Interest on capital is 5%. So how will you calculate the interest? This amount into 5 divided by 100. So amount is 3,000. So if you will see that the amount, if as per the question, if you will see in the question, this is 3,000, right? Now, similarly, you have to calculate it for the B's capital. B's capital is What is B's capital? That is 1 lakh rupees. How will you calculate this? Again, interest on capital percentage is 5. Similarly, with the same formula, if you will apply, it will be this into 5% divided by 100, which is 5,000. So now we are able to gather to this amount, which is directly given in the question. A, 3,000 is already given to you. B, you already know from where B has arrived. This amount is clear to you. Now, next is C's commission. What is mentioned in the C's commission? He is entitled on the 5% on balance of profits. So your profit was 83,000. Balance profit would be this minus 12,000 as the salary minus 8,000. From where have we got this 8,000? This and this. This plus this is 8,000. So you have got. So this is the balance profit. Now balance profit is 63,000. However, we have to deduct commission also. So I told you earlier in the class that whenever you have this case of after charging, what do you use? You apply the formula rate divided by rate plus 100. You apply this formula. And what do? You multiply this amount with your profit. So profit is 63,000. So rate is 5 divided by 105 into 63,000. So amount is 3,000. So if you would see in the question, you'll get to see that it is 3,000. Right? Now what is given in the question? It is given in the question, it is further agreed that out of the, so this line I am reading, it is further agreed that out of the remaining profit, 20% shall be denoted to Prime Minister's National Relief Fund and balance profit will be shared equally. So after deducting everything, so now this will be 63,000 minus 3,000. So this is after commission. What is the profit? 60,000. So the profit that is remaining with you is 60,000. 60,000 into 20%. What is the amount? 12,000. So if you'll see the question, how much amount have you given as the donation? 12,000. Now, whatever amount will be left, you have to divide it among the partners equally. So 48,000 is the remaining amount. If you will divide it between 3 partners, you have to divide it by 3 since they are sharing the ratio equally. So you are getting 16,000. So this is the amount which you are getting. So each partner is getting 16,000. Clear? So I hope this question is clear to all of you. Now moving forward, calculation of opening capital. This is the entirely a new concept. Now what is this? How do you calculate this? How do you calculate the opening capital? So the first of all, we really need to understand that what is opening capital. What do we understand by opening capital? So opening capital is a concept that says that it is the beginning capital or the initial capital which the partner has introduced or carried forward in the next financial year. Right? Now what happens? If I talk about the basics of it, how do you do this? What you do, suppose if I have to calculate the beginning of anything. So, let's say A is the person. We don't know how much money he has on 1st January. This we have to find out. It is given in the question that on 2nd Jan, he spent 18,000. 3rd Jan, he spent 12,000. And on 6th Jan, he received 12,000. He received, say, 10,000. And on 8th Jan, he had 24,000 with him. Closing amount. Okay, so on 8th Jan, the closing amount is this. You need to find out this thing. Now, how will you calculate this thing? What will you do? You know the opening, you don't know the opening balance, but you know the closing balance. So, what will you do? The closing balance, whatever amount he had received, you will subtract it, because that was not something he already had in the future. And you will add whatever amount he had spent, because this amount he had in the future. So, what will you do? You will say 24,000 minus how much had he received? 10,000 plus how much had he spent? 18 plus 12, 30,000. So, by logic, how much amount will be this? So, 30 plus 24, 54, 54 minus 10, 44,000 was this. And you can verify this. How will you verify? If in the starting he had 44,000, he had spent 18 and 12, he had spent 30,000, and he had received 10,000. So, 44 minus 30, 14, 14 plus 10, 24, which is equivalent to your closing balance. I hope that makes sense. So, moving forward, if I see, now we have to calculate the opening capital. Opening capital, I told you, the beginning capital which the partners would be having. So, the question says, A and B are partners in a business and their capitals at the end of the year. So, what is given to you that the capital at the end of the year were 7 lakh and rupees 6 lakh. Calculate their opening capitals considering the following information. So, the information given to you is drawings. Drawings means whatever amount they has withdrawn. So, if they have taken out any amount, they need to add it back, because that is reducing their balance. What I did, the amount which A has spent, we have added that amount, and whatever amount A has received, we have subtracted that amount. So, this you have to do. B introduced a capital, so this amount he has added, so we will subtract this amount. Interest on drawings. Obviously, interest on drawings is something that you are paying, so that is something which you are spending. So, you will subtract this amount. And the share of loss. So, loss is something which you are given, so you will subtract this amount. So, let's see the solution to this question. Capitals at the end. This was given in the question. The question was the A's capital was 7 lakh, B's capital was 6 lakhs. Drawings, I told you this is something that what you are doing. You are withdrawing, you are spending. So, if you are spending something, you need to add it back. You added it back. Interest in something that you are spending. Loss is something that you are spending. So, this is something as the total. Now, whatever amount which you are getting, which you are receiving, so that is the additional capital introduced. So, with the same logic, what you will do? You will subtract this, and this is the opening capital of A and B at the end of the year. So, in the beginning of the year, because this is the opening balance. It would have been closing balance, it would have been at the end of the year. I hope this is clear to all of you. Moving forward to our next question, we would be talking about a new concept, which is the performer of partner's capital account. So, now what it is? Fixed capital account and the fluctuating capital accounts are the two capital accounts in which a partner deals. So, we will try to understand that what is the difference between the fixed capital account and what is the difference between the fluctuating capital account. So, fixed capital account is an account where the partner is not inducing or is forced to withdraw money from the business, from the partnership firm. So, in this particular account, what you do, you create two sort of things. The first thing that you do is, you prepare two accounts. First is the capital account and second is the current account. So, when capital account is considered, you only mention about four things. Whatever the amount the partner is withdrawing, the closing balance, the opening balance, and whatever the amount the partner is introducing into the business. When current account is studied, you have the opening balance, the drawings which the partner is doing, to interest, the profit losses, and the closing balance. You have the opening balance, interest on the capital, salary or commission, any profits, and the balance. But in the fluctuating capital account, you don't create two capital accounts, you only create one partner's capital account and you merge all the entries. So over here you have the opening balance, any interest, any additional capital, the salary, the commission, profit. You have the drawings, interest, losses, and then you have the closing balance. So whereas in the case of the fixed capital account, drawings, and where is the additional capital? This is being shown in the capital account and the rest of the items are shown in the current account. So we have a question related to it. The question says A and B are partners in a business and their capitals at the end of the year were rupees 7 lakh and 6 lakh. So their capital is 7 lakh and 6 lakh. Calculate their opening capitals considering the following information. So now you have to calculate the opening capital. So I told you there was this first method that we used. The first method that we used was we used the method like this, where we calculate that the closing balance minus whatever amount he has received, and received means whatever amount he has introduced into the business, the other thing that we can say, and whatever amount the drawings spent means the drawings and the interest. This we have done. Now this is the second method that we would be studying. Says, so the first is two drawings. We studied in the format mentioned in the last line that the partner's drawings account is in the debit side, interest on drawings is on the debit side. So you have this. So you have interest on drawings, you have this, and the second thing that you have is interest on drawings, which is, so drawings 75,000 and 50,000. B introduced, so introduces this part, so B introduced 1 lakh rupees. Interest on drawings 7,500 and this, so 7,500 and 5,000. Share of losses debited to each partner's capital account. So this is something which the partners are bearing as a loss. This is already given to you, 7 lakh and 6 lakh. What will you do? You will add all the items. When you will add all the items, you will get 8,02,500. When you will add these items, you will get 6,75,000 as the amount. Now you will deduct this amount. So over here 8,02,500 minus nothing will give you the balance of 8,02,500. 6,75,000 minus this will give you this balance. Hence the debit and the credits are equal. Over here the credit word is not mentioned. Make sure that you are writing certain things. So there are two ways of calculating it. You can use it by solving it from the pro forma of the opening capital account, or you can make the partner's capital account. So debit includes all the expenses and credit includes all the incomes. And when I say incomes means gains and everything, and expenses include your losses. Clear? Moving forward to our next question. This is a full-fledged question and it is very important for you to understand this question. So the question says, Akhil and Ruby are partners sharing profits and losses in the ratio of 3:1. So their profit and sharing losses 3:1. On 1st of April, their opening capitals are 5 lakh and 3 lakhs. During the year ended this, they earned a net profit of rupees 5 lakh. Interest on capital, it is given 6 lakh. Akhil will get a commission of 2% on what? Net sales. Ruby will get a salary of 5,000 per month. Bhuvi will also get a commission of 5% on profit after. So when I say after, I told you in after we use the formula rate divided by 100 plus the rate and the amount on which they want us to calculate. Partners drawing during the year were, so 80,000 for Akhil and for 60,000 for Bhuvi. Net sales 30 lakhs. And after considering the above factors, you need to calculate the profit and loss appropriation account and the capital accounts of the partners. So let's solve this question. So let's start with it. So we have to prepare the profit and the loss appropriation account and the capital accounts. So over here you have to mention the profit and loss appropriation profit, and this is 5 lakh rupees. So this we have already done, right? So this is 5 lakh rupees and we have mentioned this amount over here by the name by profit and loss 5 lakh rupees. The next is interest on capitals is to be allowed at 6% per annum and their capital is 5 lakh and 3 lakh. So how will you calculate this? For Akhil it is 5 lakh into 6%. So the amount is 330,000. If you will see this amount, it is 18,000. Clear? Now you have added these two items, so you are getting 48,000. Next is given to you is Bhuvi is entitled to get a salary of this 5,000 per month. So 5,000 into 12, which is 60,000. Next is Akhil will get a commission of 2% on net sales. So 2% on net sales is 30 lakh rupees. So how we have calculated the amount for Akhil? It is equal to 30 lakhs into 2%. This is how we do it. So the amount is 60,000. Clear? This we have calculated. Now we need to calculate this. Bhuvi will get a commission of 5% on profit after deduction of interest, salary and commission. So you have to deduct all the things and then you have to deduct this, and this includes her commission. So for Bhuvi, if I'll say, so this we have solved. So if I want to do the calculation over here for Bhuvi, what will I do? So this includes this, whatever the profit you have, minus this expense you have incurred, this expense you have incurred, and this expense you have incurred. So this is the remaining profit. Now this amount is the remaining profit. I told you what is the formula. The formula is rate. Rate is 5% divided by rate plus 100 into the remaining profit. So if you will use this formula, what will you get? Into this amount, and when you get this is 15809. So round off amount is this. When you will add all these things, what you will get? 75,810. So it's very important for you to understand that if it is after, then you will add rate works commission. If it is before, then you will do the normal calculation. Partners drawings during the year were this. So these are the drawings. So this will appear in the partners capital account. And what else have they given? That they are sharing profit in the ratio 3:1. So what will you do? This is the remaining profit. So if you will subtract this amount from this, you will get 316. You have to share this amount in their profit sharing ratios, which is 237142. You are getting this amount. If you will divide this, you are getting this amount. Hence the totals are same. Now moving to the partner's capital account. Over here we write all the incomes for which the partner is getting. So I will show you. Okay. So you have all the incomes from where the partner is getting. So the opening balances 5 lakh and 3 lakh already given in the question. Interest on capital. Interest on capital you must have calculated above. So this is over here. What next? The salary which Bhuvi is getting. So this is the income for that. Commission. Again that is an income for that. What else? Are they paying anything? The profit, that is also an income for them. Now, drawings is something which is a loss for them, and it is already given in the question that the partners are withdrawing rupees 80,000 and 60,000. So this, and these are the remaining balances. And how you have calculated these balances? The total. So the total of this, which is 827,142 minus this. So this is this minus 80,000. What are you getting? Okay, I think something went wrong. So I'll do again. F equals to, I think this is a formula. So I'll copy paste this amount. So if you will solve this minus 80,000, you are getting the same amount. Same, you will do this and the answer will be the same. So I hope this is clear to all of you. So now this we have done. So moving on to the next. This is your assignment question which you have to solve and submit to me. So the question, I'll read it for you. Asif and Ravi are partners in a firm sharing profits and losses in the ratio of. So the ratio is given to you, which is 3:2. Their capitals are given to you, 6 lakh and 4 lakhs. Interest on capital, it will appear in the profit and loss appropriation account and their capital account. The interest on drawing, it is their expense, so it will be deducted from their capital account, and similarly it's an expense and the income, so it will appear on the credit side of the P&L appropriation account. Asif is entitled to a salary of rupees 2,000 per month, so this is an expense. And the income, expense for the company and the income for partners. So when partners capital account is considered, whatever the income is for them, that will come in the credit side, and that will be an expense for the partnership firms. It will come on the debit side of the P&L appropriation account. Commission, now before charging such commission, so you don't have to add the rate with 100. Asif, rent. Now this is not something which Asif, so I told you that when interest on loan is considered, what we used to do, whenever the interest on loan was considered, we used to treat the partner as a third party, and same is the case with this. So this amount you will deduct from your profit. So that this is the 4 lakh is the profit. So what will you do? This minus 3,000 into 12, which is 36K. You will get the amount and then you will solve the question. I hope this is clear to all of you. Thank you so much. Keep watching. All the very best. Stay healthy and stay fit. Thank you.